there's no excuse anymore. Everyone wants to be their own fund manager. Everyone thinks that they're good enough to be their own fund manager, especially in crypto. Everyone thinks that they are great. Go on then. Like, there's no reason not to anymore. Like, we'll see you on Alvara.
Today, I sit down with Dominic Ryder, co-founder of Alvara Protocol, a groundbreaking initiative aimed at democratizing fund management.
This is pure meritocracy. It's based on talent. Whoever has the best performance will rise to the top.
In fact, how they describe themselves, redefining ETFs, the gateway to the world of on-chain fund management.
The first part is one thing that we've invented.
We discuss their all-new Ethereum token standard,
which stands for Basket Token Standard.
And it's designed to revolutionize the creation and management of tokenized baskets of digital assets.
And there's no reason why, if we don't do everything right, like, it can't be one of, you know, the bigger ERC20 tokens of all time.
This is everything you need to know on Alvara Protocol.
Because I have a background in compliance anyway, not financial advice, and we're always taught to balance stuff. There's a lot for us to get to between, you know, where we are now and where we're targeting.
Thanks, Alvara, for partnering up today and making this interview possible. And let's start, Dominic, how you first got into crypto.
Yeah, so I have been in, everyone always wants to know, like, first time in crypto versus first purchase. For my sins, I think I bought XRP in 2018 on the dip, and it just kept on dipping. But that got me into, I've been used to that since. So that was back in 2018. I think it was like 45 cents, and it's stuck there for like ages. But actual full-time career in blockchain was 2020. Incorporated my first protocol, but prior to that, I was in traditional finance. So I started out as a junior broker, 250 cold calls a day. You know, bottom of the rung of the sort of London stockbrokers, and then I did very well and was trading derivatives for the firm until I moved on and joined a wealth manager we have here in the UK called St James's Place. I was associate partner there. They're a FTSE 100 publicly listed company. And after that, didn't last long there, because suitability reports and telling rich people what to do with their money and them not listening to you because they all work in finance in London just wasn't the. That's where my hair went. But yeah, then moved to traditional sort of venture capital for a few years, and then jumped into crypto full time from 2021 middle of.
So that sounds like a perfect segue to Alvara, because redefining NFTs, or a decentralized hedge fund. What is Alvara for people who have never heard of it?
So it's definitely one that's multifaceted. In the first part is one thing that we've invented, but it's technically not ours, which is what is currently been described as a BTS, which stands for Basket Token Standard. And so that is a token standard, just like how the ERC20 was the 20th ever Ethereum request for comment, is what ERC stands for. So the 20th one was ERC20, the 721st was the NFT 721, and then you had like 1155, which was another NFT. And so we've submitted Ethereum request for comment of our BTS, of which we now have the number. So it is the 7621, which I think I'm not sure when it's going out, but I don't know if we would have announced it then. So it might be here first.
I love that, an exclusive.
Exactly.
Go on.
I was going to say, and this is the open source aspect, in the a token standard, you can't like patent or gatekeep it, because obviously, you know, you need mass adoption for it to be. Submitting it for a token standard and getting the number is one part, but, you know, in order to get that mass adoption and become the go-to standard, it needs to have, you know, people actually using it, because otherwise it's, you know, not really anyone's not really a standard. So that is open source. Anyone can code it, they can access it. The Alvara protocol is to facilitate the mass adoption via building out the infrastructure for it. So the ability for people to mint it via a factory contract, so making it as easy as possible for people to input the tokens, select the image, wrap everything all in one click. I can show that a little bit later. And also sort of the leaderboard function and the gamification, because essentially it works like a sort of like a Aviva or Fidelity, where you can shop and see all of these different funds, or baskets of shares, which a fund essentially is, but with the crypto version. And so we've tried to solve that scalability problem because we're not the first person to try this in crypto. We do have competitors like Enzyme Finance or AstroDAO, but they have a few limitations, which we've tried to get rid of all of the reasons why people wouldn't use this token standard, so that it can get the mass adoption, not just from crypto, but eventually when traditional finance moves on chain, if we have that go-to token standard, like how people don't even think about the NFT being the 721, they just mint an NFT. It's just the one you use. And if we can get that sort of use case out of the token standard, then when traditional finance does come on chain, they will use what everyone else is already aggregating against.
So this allows anybody globally to become their own hedge fund, DeFi hedge fund, or allow consumers to see the hedge funds out there, total transparency on the blockchain, and invest if they choose at their own risk, own reward into other people's hedge funds. And your secret sauce, you're saying, is the token standard and also the background, your background in TradFi.
Yeah. So I'd say that the factory contract allows for everyone. And I'll pull it up and show you. Yeah, we've tried to simplify this and make it as easy as possible. And so if we click and let's see, I think I got a short that I had on the other day. There you go. It was
very nice.
I'm not sure what date that was from, but it went okay. So if we call this my daily demo and ADD. There we go. Attention deficit disorder. There's a lot of people watching this will relate.
100%.
We got two options basically. 99.99% of real life funds are discretionary in that anybody can, everybody who goes into it knows that the manager is making the decisions. Sometimes they can have like votes or shareholder votes, but usually it's almost certainly 100% down. And so this is the scalability problem that a lot of our competitors have faced, in that having full discretion comes with problems. It allows for full decentralization, but it's like Uniswap, PancakeSwap. If people list a honeypot on there, PancakeSwap will tell you before you buy it, this looks like a honeypot, transaction reverted. But if you choose to ignore that and click through anyway and buy it anyway, even though they've told you it looks like it will be a honeypot, we have to give users the ability to take some responsibility sometimes. Unfortunately, in the involvement of the protocol in stopping and whitelisting who can or can't manage one of these is essentially us doing the job of the regulator, saying who can or can't become a fund manager, which is literally the job of the regulator. So we are that very, very bottom layer where we, as the foundation, manage Alvara Protocol like an Alvara lab, like a Uniswap Labs Uniswap model, but we can't get involved in aspects like whitelisting or allowing everyone to have governance, because then we're centralizing control and giving ourselves a big target on the back for trying to do the regulator's job. And so we make this one a quick metaverse basket, add some sand, add some XC. There we go. So at present, this is on Goerli testnet, Ethereum testnet. So it's linked up to Uniswap on the back end, but we will be having the ability, and we want to try and aggregate as much liquidity and chains as possible, because we don't want any limitations, because every liquidity source we should try and route through if possible. So put 30, 30, and 35. Allocate. Put one Goerli ETH there. Have a little look, and then mint that. Got to put the thing through here. Oh, I'm on. I think I'm on Ethereum mainnet. Let me go on to Goerli there. I might have to refresh, but let's hope not.
But this is good. This is good for the audience to see, so they learn what to do, when they're in this situation.
Here we go. We're there. So let's see how long this takes. Don't fail with me now, Goalie. Give it an extra 10%. Your block explorer. Now wait for it to index. Oh, there we go.
Yes.
So you can see we call the create BTS function on the factory contract, and that swaps everything into the underlying tokens, and it mints the BTS to our wallet here from a dead address. And so the key part of all of this is that every single BTS pulls through onto our leaderboard. And so it's a complete meritocracy. It doesn't matter whether you have a CFA, a chartered financial analyst, whether you are college educated, whether you are high school. When I was, even though I had 10 years of experience in the financial industry, if I applied to JP Morgan or Goldman Sachs, I would tick a box that said that I didn't have a degree because I joined my stockbrokers in what was supposed to be my gap year, but loved it and stayed on. And that held me back because if I ticked that box that said I didn't have a career, they didn't even bother to look at any of the other experience. It's just if you didn't have a degree or college in US, then you would just get filtered out. So this is pure meritocracy. It's based on talent. Whoever has the best performance will rise to the top. You can see that we can click through and contribute. Adding 0.1 there. Successfully contributed, but I didn't hear the ding. There we go. Well, there we go. That was quicker.
Nice.
See, this gives us the ADD LP token. So this part is what changes the protocol from just a bit of fun and degenning with some friends and managing a portfolio to something that is core DeFi infrastructure. And that is because every single LP token given to contributors is unique to that individual BTS. So that means that you can build governance, you can build staking, you can add liquidity, you can build lending strategies, derivatives, anything that can be innovated on top of a normal ERC20 token, just listed on Uniswap, any protocol, can be innovated on top of any individual BTS. So if you as a manager are earning 1% of everything within your BTS, if you are successful, you can build a full protocol and sub-DAO based around your successful basket of tokens, whether you by accident happen to mint one and it just so happened that you became one of the top managers and people started contributing, or if you even approach this with a website, business plan, official Twitter, and told people actively who you are, what your background is, and why you want to gain contributors to run this, then everybody is their own master. There's no limitations and there's no reason to not use the BTS as the wrapper because we allow for full discretionary. Even with the governance-based ones, we still have an emergency stables option because the last thing that what you want to be doing if you have like a black swan like Luna UST is saying, guys, can I stable in 3 days' time? Because, it's just not going to help. And so the only loss is opportunity loss if you, go to stables, which is something that most people can live with. And so
yeah.
Go on. No, I'll let you in.
Well, I just want to know, who is this for primarily? Institutions or consumers or both?
So this is for the whole range. We're really gamifying the leaderboard for the purposes of mass adoption and for creating that go-to token standard. So it's a bit, if you look after pennies, the pounds will look after themselves. And so by allowing for as many people as possible to begin using the BTS as their go-to sort of wrapper for this sort of vehicle, or because a lot of people call it, you have like vaults at Enzyme, you have ETFs and indexes, depending on if you're at AstroDAO or Index Finance, there is no go-to aggregator across all of these different ways of coding it until now. And so by submitting this for an official Ethereum request for comment, getting that official number, having the code open source, we are allowing for anybody to code one if they like, a minimum of 5% of every factory minted BTS is in the Alva token. But if you code it yourself, that's not, you don't need that. That's just like our stipulation rather than fee. And so it means that we can get the mass adoption of the token standard by giving everybody that ease of access. But what we've done to make this truly institutional in its nature is that we've taken the same gauge weight governance voting structure as Curve Finance. So for those who might not be familiar with Curve, you stake your Curve tokens and you get in return vote escrow Curve. That allows you to vote. And when you vote, you send Curve rewards to Curve is a DEX. So you send it to the LPs and the stakers who are staking their LP. So we've taken that exact same mechanic, but we've applied it to the BTS's LP tokens, which means that if you are a Pantera, a Multicoin, if you are a GSR or any institution or a jump trading, the more Alvara you purchase and the longer you stake it for, the more votes you get. The more votes you get, the more rewards you can send your BTS's contributors just for giving you their ETH rather than somebody else, which means that it's this constant incentive to accumulate and stake and lock, because the more votes you get, the more yield your contributors earn. The more yield they get, the more people will contribute to that in order to earn not just yield, but also any upside. The more contributors, the more fees you earn. The more fees you earn, the more you can buy, the more you can stake. And it's a self-fulfilling and perpetuating cycle of accumulation on an institutional level, because with Curve, you had what was called the Curve Wars. And the Curve Wars was Convex, Yearn, Stake DAO, Pickle Finance, Beefy Finance, all of these liquidity aggregators trying to get as much VE Curve as possible in order to incentivize their LP pool the most, because the more it was incentivized, the more fees they would earn. So we've taken that mechanic, but applied it to what could be, rather than tens or hundreds of yield aggregators, thousands, tens of thousands, or hundreds of thousands of individual baskets of tokens, which anybody can mint at the click of a button, and any institution can hand code with no limitations whatsoever. And so that's where what I'm so excited for about Alvara is just how far the web goes, because we are this very, very bottom rung of which anybody can innovate a protocol on top of. And you let alone everything that can be done on top of any other protocol. And this is all just the liquid crypto and token side. Like the BTS as a wrapper can be used as like a multi-SPAC, launching new ventures, contributing ETH, because the mechanic stays the same. The only difference is, as long as it can be tokenized into an ERC20, it can be put into the ERC 7621, which is the BTS. And so you could have commodities, you can have eventually, hopefully, shares. If it can be tokenized, it can be put into a BTS. So Larry Fink, CEO of BlackRock, says tokenization of assets on the blockchain is the future. And if that's right, and Alvara has not just produced and published the go-to wrapper for this sort of management, but it's also aggregating all that data and bringing everyone to us as that marketplace, then it's like OpenSea releasing the NFT at the same time. And that's a level of like first mover advantage there is. And everything leads back, because if people are trying to get contributors to their BTS, where are they going to send them to contribute? And so it's like the marketing power of 1,000 protocols built on top of us, because everything comes back to the source. And so obviously, this is all our big ambitions. There's a lot of it for us to do before getting from where we are now to where we want to. But when you're looking at like a new protocol, if it's a game, if it's like a metaverse, like sure, it can get to like a few billion, 10 billion maybe. But we're not limited by our sector with Alvara, because our sector is, asset management, which is ever expanding, ever accumulating. And so even though it's hard to get to that level, it is one of the few things where you don't have that ceiling. Which, yeah, I'm just excited, because even now, like speaking to people, I get told, or think of myself like new ways that people could utilize this, because the web just keeps going.
In a decade, do you see this being bigger than the BlackRock ETF, Bitcoin?
Ooh, I mean, if we do everything right, I don't see any reason why it couldn't be. I mean, it is very much like a Fidelity or an aggregator, but yeah, again, BlackRock has these similar. Uh, I'd say it's a little bit different than BlackRock, just because BlackRock label all of theirs as like the BlackRock. They don't allow for people to like select others. So I'd say Fidelity is probably a better description, just due to the fact that they allow for other people to put their funds on their marketplace. But yeah, I mean, the people have said this before about, Bitcoin ETFs are double-edged sword, isn't it? Because in reality, it's like that meme where you have that like big hench dog saying like, yeah, Bitcoin screws the system, and then it has like BlackRock, please pump my bags, and this little dog sitting there. Because yeah, you want that spot accumulation, but at the same time, you're centralizing and taking so much, power away from exactly why this was created. So really, this is the true ethos of crypto. What we're building here, we can't have every single chain in the world, and obviously Bitcoin smart contracts. This is a brand new token standard. It was within the max capacity of what smart contracts can take data-wise. We had to cut it down so many times to get everything to fit and to get the transactions in. But if you're looking for and you care for the tech, which is quite hard to find in crypto nowadays, but this is really trying to give that exposure. The good part is even the objections we're getting now are really bullish ones to get, because I was talking to a market maker the other day, and their concern was they were worried that DEX liquidity wouldn't keep pace with our ambitions. It's a bullish thing to get, but they're right, because in traditional finance, best execution is so important. Like 0.01% is enough to make you move provider, because at such scale, that can be millions or billions. Probably not billions, but millions anyway. And we need to be sourcing liquidity from as many places as possible. So we're talking to like Fireblocks, FalconX, Coinbase custody, on the ways that we can tokenize centralized exchange liquidity at its base. Obviously, pure DeFi all the way, but people should have the option to toggle, if they're happy to take on a centralized source, if they toggle it in the left or right-hand corner, give people that option. Because at the end of the day, we don't want anyone to have that get out of jail free clause where, oh, I don't use the BTS because of XYZ, or because it doesn't have the flexibility, or because it doesn't have the selection. So really, we want to give as many options as possible. And that's why it's important that it is this very, very decentralized layer. But as the foundation, we very much are working on the B2B, talking to centralized liquidity sources, talking to DEXs, chains, even regulators, because if we can get, the ERC 7621 actually recognized as like a wrapper, for actual ETFs or funds, then like, the sky's the limit. So that's going to be our predominant work, is really trying to bring legitimacy to this area of like our space.
I have more questions, but just for this visual, this walkthrough, is there anything we still need to cover with this?
I don't believe so. Check. I mean, yeah, it's just everything we got here is a bit of a mixture. There is one part which is not bit out just yet, but our marketplace. So once people actually have their own, whether it's an index or a tracker, they can actually sell the rights to that, assets under management and fees that they're earning on our marketplace. So we've got all of the, revenue options of a NFT marketplace. We've got the 0.5% in, 0.5% out of any contribution. And as well as that, we have all the monetization features of a CoinMarketCap, CoinGecko, and DEX tools. So great part of all of those three is that they're all pure Ethereum. There's no sort of selling down our own token to try and make revenue or any of that, because everything is just contributions in ETH, we also have the constant accumulation mechanic from institutions and anyone who's running their own BTS to buy and stake for as long as possible, plus 5% of every factory minted BTS and 5% of any contribution into any factory minted BTS, all those small little purchases of Alva. So really the only sort of sell pressure that comes in would be from incentivizing the BTSs, but obviously in order to incentivize them, people have had to have bought and staked in the first place to actually vote and send. So yeah, the tokenomics have been, I say so myself, thought about a lot. But yeah, in terms of like the front end, we got a lot more to come. But for now, yeah, I think we've covered everything that we have on testnet.
And we've touched on this today, but like, what is the utility of the token? Governance and utility.
Yeah, well, I mean, I don't like the term. Well, governance gets a bad name because it's the go-to. Like, does the token have utility? No, governance. The governance and the gauge weight voting is very, very different. So technically, it is still governance because you are staking the tokens for a voting token and then voting with those. But the difference is that you are locking them away for 4 years. If you look at Curve, the average lock time is 3.3 years, and 70% of the VE Curve supply is locked for that time. So that is a huge amount to be taken out of circulation. So the governance is this accumulation in order to vote and incentivize, and it locks it for 3 years. So rather than just governance like, do people want to, give an opinion? It's very much governance based on that competition, sparking the institutional competitiveness and accumulation, just like the Curve Wars did for Convex, which, Convex is a top 100 token that couldn't exist without Curve's infrastructure. And so we are trying to get that exact same mechanic, but, with the ability to have thousands or tens of thousands of individual BTSs in the long game. So the gauge weight voting governance is, definitely governance as a mechanic, but it's like governance 2.0, let's call it. That's good.
Nice.
And, and the 5%, obviously, of every single factory minted BTS. So, that's permanent. And so it's effectively also locking that and taking it out of circulation, because the only thing that changes is the AUM in any BTS. But if it's factory minted, then it will have to have a minimum of 5%. Like I say, people who code it themselves will still recognize it and pull it through if it's coded to the same standard. The 5% is just for factory minted. So the accumulation is sort of baked in on a decentralized level, and every incentive is getting people to lock it and use it to vote and incentivize their own BTS, whether they're retail or institutional. Everyone's going to benefit from sending yield to their LPs, because then they get more and more contributed.
I like this. It sounds really interesting. I want to stay involved. What's the best way to do that?
So Telegram, Twitter, all of the normal socials. I mean, we do have a comprehensive docs. Our role really is going to be that educational aspect, because once people fully understand just like the amount of facets to this and how like deep it goes and how far the web goes, it's such a interesting proposition as well. Not just, not just the Moonboy stuff, but, as this new core infrastructure, very bottom layer, to see what people actually innovate, because it's going to be a whole new asset class opening up to crypto. You could see every BTS on like a coin market cap style. Well, not just ours, but there's no reason why CoinGecko or CMC wouldn't aggregate BTS data and also have a link to contribute through. So, I'd say follow our socials and take a look through our docs. We're going to be trying to provide as much content around, what can be done, and because whether it's the best real world assets that are available through the platform, and whether it's other protocols which have property sides of it, we want to hear from lots of different protocols, because if you have a token or protocol or anything representative with liquidity, as long as it's represented by an ERC20, we can pull it through. So get in touch with us. Like, we want to have and give everyone as much access as possible, because we have the ability to properly democratize and create a true meritocracy in all of finance. Like, anybody from any background, if they are the best performer and they're the best at selecting, there's no reason to be held back anymore, because it's all on chain, it's all visible, doesn't matter who you are. So get in touch as a protocol, because if you've got a good proposition and something different and you want people to be putting it into a BTS, it's in everyone's benefit. The protocol, the users get better access, and obviously we want to give that to everyone. So yeah, just get in touch on all of our socials. My Twitter's at Dominic Vemp, and yeah, at Alvara Protocol is the main. So yeah, those would be the best ways.
The links are down below. And by the way, I just followed today, so I'm excited. But you guys are launching on Tenset?
Tenset, yeah. It's very close to Tencent, which is like the Chinese telecoms Tencent. But yeah, no, so Tenset, I think we've got the IDO going live in less than a week now. I was just looking at the date in the bottom corner. And then
why'd you choose them?
So they are very, very good at, well, of course I would say this, they're very good at selecting protocols, but they're not as widely known as a launchpad like, say, a Seedify or a DAO maker. But that's because their Tenset Gem Infinity launchpad has only launched, I think we're their 8th protocol. And so they've launched MetaHero and Everdome, both got to top 100. They launched Satoshi Island, which is a really cool protocol. If you haven't seen that, check it out. It's like basically an actual island where you can buy land and live. Fame MMA, which is another one, and they did Farcana, which launched recently, was massive as well. So of the tokens that they've launched, they've all been very, very high quality, which is exactly why we went and approached Tenset, because I've known the original founder for a while. And so when I told him about this, because we've been building it out and building it out and building it out, and then finally I said it's ready. I showed him and he saw it immediately. And yeah, that was history.
That's awesome. And let's take us off screen share, if you would. And I want to go to final thoughts. We've covered so much today. I definitely feel like I have a much better understanding of the project. Is there any aspect we didn't cover?
It's hard to say. Not off the top of my head. I mean, there's always stuff that comes up and new things and new ways to innovate on top of it. But yeah, it is truly infinitely scalable. And there's no reason why, if we don't do everything right, like, it can't be one of, the bigger ERC20 tokens of all time. Just due, and like I say, always, because I have a background in compliance anyway, not financial advice, and we're always taught to balance stuff. There's a lot for us to get to between, where we are now and where we're targeting. But in terms of like limitations on the industry, the sector, everywhere we're going, like, we're not limited in that regard. And therefore, if we keep doing everything right, then, there's no reason we can't. But yeah.
Dom, thank you so much, man. Links for all your stuff are down below. Final thoughts for the Altcoin Daily audience.
I'd say, yeah, jump on board, get involved, especially because it doesn't even matter if you're coming and approaching it just for fun and picking up a basket of tokens. If you perform well, people will see you on the leaderboard, and you could wake up the next day and you might have 100 ETH worth of contributors, and then suddenly you're earning enough that you can actually, go into this full time. At the same time, if you want to approach it as an actual business, have a website, try and give your background and tell people why they should contribute. There's no excuse anymore. Everyone wants to be their own fund manager. Everyone thinks that they're good enough to be their own fund manager, especially in crypto. Everyone thinks that they are great. And go on then. Like, there's no reason not to anymore. Like, put your money where your mouth is, and we'll see you on Alvara.